That's your money saying it's time for a McDonald's run. Because with new McValue at McDonald's, you get more than you expect. Like buy a 6-piece McNuggets and add a McChicken for just $1. Your money says let's go. Get more than you expect with new McValue. Prices and participation may vary. Valid for item of equal or lesser value.
Reality radio for a really great future. We're talking real money.
Remember last year?
Oh, do I ever?
Last year, we had one of our bigger interviews.
Yeah.
We broke it wide open. We talked with a gentleman by the name of Jordan Goodman,
yes,
who was going all over the country.
America's Money Man or America's Money Answer Man.
He was going around the country making millions of dollars.
Turned out it was a whole lot of money, yeah.
Selling people on a Ponzi scheme.
Well, he didn't know it was a Ponzi scheme.
Oh, so he said.
Yeah.
Yeah, right. It was too good to be true. It was like 8% returns with no risk.
10%.
Yeah,
Come
on,
8.
It was called Woodbridge.
Yeah, I'm not even going to cross the street for 8, but for 10.
Yeah, guaranteed money. Yep. Absolutely guaranteed. Yep. You couldn't lose on this
Remember
deal.
they're doing notes. It was like bridge loans for people, developers.
Yeah, it turns out that wasn't what it was.
No, it was about a $1.3 billion fraud, 7,000 investors. Well, the update is Robert Shapiro, the CEO of Woodbridge, he has pled guilty. Now, remember, Jordan Goodman on the show said,
yeah, I remember.
This is legit. The SEC's got this wrong, et cetera, et cetera.
And I said, Jordan, if it is, he said it is not a Ponzi scheme. Yep. I said, if it turns out to be a Ponzi scheme, will you give the investors back all the money you made? And he said, absolutely.
And it turned out that Jordan, we learned this. He made
$2.5 million.
It was a lot of money.
And the SEC made him return that money to the investors.
Well, Shapiro has pled guilty last week. He faces as long as 25 years in prison. He used the money to buy a $6.7 million home. Now, I got a question a little bit on this. How far does 6.7 really go in a home these days? You couldn't get a very fancy place for that.
Apparently, you live in Seattle.
Yeah, $3.1 million for chartering planes and personal travel.
Where I come from, $6.7 million buys half a state.
I don't think you can cross Evergreen Point Bridge for that anymore. But anyway, so he's headed to a new home, which will probably cost as much, but the space will be far limited and the view not nearly as good. So Robert Shapiro taking the fall. I don't know if they're going to get anybody else criminally on this thing, but we'll see.
I don't know, but I got to tell you, that basically for a guy like Robert Shapiro, he's in his 60s or 70s. That's a life sentence.
Yeah, he won't become. Well, he's 61.
61. Could be. Maybe not. Yeah, he might get out in half that time, so he could be out in his 70s.
Yeah, so he might be.
855-935-TALK. If you have a question that has something to do with money, managing money, making money, saving money, avoiding rip-offs like this one and many others, including insurance.
If they tell you you're going to make 10% a year, do not take the deal, period.
If they tell you 10% guaranteed, I can give you a guarantee, period. It's a scam.
It has to be.
It has to be. 855-935-TALK. These people just lie through their teeth. Give us a call, and if you do call, and we still have a couple at sick, what do we have, about 3 or 4 seats left?
Yeah, I think so for Wednesday.
All right, so you got to call soon. 855-935-TALK. And Michael, welcome to Talking Real Money.
Hi, Michael.
Hello, Don. Hey, Tom. How are you?
I'm well. Thank you for calling.
Thanks for taking my call. And, Don, I've been listening to you since the early 90s, so you've been a wealth of information.
I remember the 1890s, too. It was a tough time.
Go sit down.
Oh, sorry.
Did I say 1890s?
Yeah, no, he didn't. He's just harassing me.
That's because my daughter asked him the other day when he said that we've been friends since the 80s. She said, the 1880s? Dad? Anyway, so go ahead.
Well, that happens when you have kids.
There you go.
Hey, I got a real estate question. My mother-in-law passed away recently, and my wife is determined to sell a house. I think it has a lot more to do with the emotion aspect of it. In the meantime, it's actually a townhouse. We could rent it for $1,000 more a month than what the mortgage is on it. We also have other rental property that is really, it's not making much of anything. It's paying the bills, but she wants to sell this property. My question to you is, if she's determined to sell it, it's got to be parked somewhere other than a savings account. I know I could reinvest in other real estate, But eventually, at some point, we got to pay capital gains. And at what point do you call it quits?
Now, wait a minute. You're going to get a stepped-up basis on that home.
No.
correct?
This is investment. Is this your home?
No, this is his mother-in-law's.
Mother-in-law's home. Well,
Yeah.
okay, so it's not investment property. So you would not. This would be a capital gains free event
Basically.
if you sold it.
You get a stepped-up basis.
Based on my research, that kind of depends on our tax.
No. The date. Someone has to appraise the value of the property as of the day that your mother-in-law passed away.
Right. If it's inherited property, the
Correct.
basis steps up
Yep.
to the value at
We'll
the
come
time
back.
it was inherited. So there should be no capital gains on that. And I think one of the things that we're trying to get to is there's a lot of money sitting there. And what's the value of that money? You're talking about that $1,000 a month. Well, let's talk a little more about what it's really worth. 855-935-TALK is our phone number, and we'll come back to Michael, and then we'll get to you in just a little bit.
Tom and Don are talking real money.
Do you need a little help with your investments? Set up a free, no-obligation appointment with one of our advisors at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Once again, our phone number is really easy to remember. It's 855-935-TALK, 855-935-8255. You can call us anytime, 24 hours a day, 7 days a week, and ask a question. And
I thought you were doing like a beep
wait,
or something.
where did my mic go?
Well, I don't know. Your mic's still
one
there.
of my headphone things went out.
Oh, okay.
It was like, whoa,
You sure
this
it just wasn't one of your ears went out?
or
instead?
one of my ears.
All right.
Let's see. No, that ear's working.
You never hear me on
It was
that
just
ear. I know that.
the headphone thing went.
Oh, okay.
And I went, I
Got
can't
me
hear
going.
myself
You're
because I
okay.
only had one ear. See,
Yeah.
if I have this one on,
You
I
don't
can't hear
know.
myself anymore.
Right, I get it.
Anyway,
Okay.
we're talking with 855-935-TALK's our
Yep.
number.
You get a gift.
You
Yep.
get a free ticket
Yep.
to my upcoming Wednesday class at noon.
Which is down to about 1 or 2 seats, so pretty.
1, 2, 3, 4. I think we're two. I think
Two
we're two.
left.
Yeah.
Yeah.
All right. We're talking to Michael right now. Michael's mother-in-law left them a piece of property, a townhouse that Michael would like. I gather just from the conversation, Michael, you'd like to rent it out, make $1,000 gross income. Over and above.
That's above the mortgage.
Above
Does
the
that
mortgage.
include taxes? Does that include
Right, that's why I said gross income.
all the rest of the stuff that goes into?
Now, Michael,
property?
here's the question I need to ask you, though, before we can go further. How much is the town home worth, and how big is the mortgage?
The value of the property right now is at $260,000. I'm a real estate guy, so
Yeah.
there's something
Yeah.
I know about real estate.
Right.
Anyway, the mortgage currently, I would say, I believe it's right around 90, maybe 88,000.
Okay, so
then there's the cost of selling.
Right. The point I'm getting at is the reason, though, you're grossing $1,000 a month is because you're grossing that $1,000 a month on a property that doesn't have a big mortgage. It has a smaller mortgage, a relatively small mortgage.
And that gross, if we were to rent it for $1,000, that's over and above
Yeah.
the PITI.
Right. But there's PITI and maintenance and vacancies and damage and all those wonderful things that every landlord runs into now and again. It's the reason I tried a landlord gig once and it was miserable. I tried real estate investing, but you're in the real estate business, so you may very well be good at this. But as you said, you got some other properties that aren't netting anything. The reality is, and again, you can know real estate, but I know that nobody knows, no matter how smart they are, what direction a real estate market is going to go. And the hotter a real estate market is, the less likely it is to continue to get hotter. And long-term, 100-year plus, real estate has barely beaten inflation.
Nationwide,
I would
coast to
agree, I would
coast.
agree with you on that. But if you can net, after all expenses paid, $1,000 a month, I think that's. But anyway, my question to you is: if my wife is determined to sell the property, where, I am inclined to buy additional property. I've got some real estate down in Florida that, it's vacant land that's being bought up by the villages. The villages.
Oh, I know the villages well.
Yep.
And my point is do we take, I don't want to take the money and park it into a savings account that doesn't yield anything.
Right.
So what would your recommendation be as far as putting that money? If we don't buy additional real estate, we are looking at buying some.
How soon do you need the money then?
It's not a matter of needing the money. It's a matter of doing the right thing. And my question is I'm 53 years old. My wife is 51. Mm-hmm. So the question is as far as our future goes, retirement-wise, what would you recommend? Where would you park the money if we don't buy real estate? We wind up selling this property. Yep. What would your recommendation be as far as reinvesting that money?
Let me give you a couple of things. One, buying what you're doing with that Villages thing is purely speculative. I mean, that gets into just like buying stock gambling. We're not fans of any kind of gambling. It's particularly if you're counting on this money for your future. If you sold the property, you're going to net out or gross out $170 after you pay off the mortgage and then whatever expenses. That money, I think, because you already own real estate, you're real estate heavy in your portfolio, it sounds like, that money needs to be in something that's more diversified. And that's, I would suggest you use the two funds we talk about so that you have equities and you have bonds so that you have diversification, because I don't believe that $1,000 a month, you're making $12,000 a year net after all expenses on any real estate property, unless you're the luckiest person in the world and nothing ever goes wrong. You could make, if history's a guide, you can make 6-7% per year on a balanced portfolio of stocks and bonds, or you would have in the past. And I think that is a much better way to go.
Well, and here's another way to look at this, too, that I think deserves, even though at 53 you're still relatively young. The fact is, one of the problems with real estate is if you need this money, it's hard to get to in real estate.
Can be very hard in certain economies. We just had
somebody come in our office who has a couple of properties. One person retired relatively early. They don't have any income, and they can't get the money out of either property to pay the bills, so they're kind of stuck. Not saying that is your situation necessarily, but it's one that I see. And another reason, by the way, when I tell people it's not always the best idea to pay down your mortgage early, because you got to be able to create income at some point. So back to what Don said. So I was just doing some ballpark numbers here. I don't. You could probably tell this better than others, but what do you think the sales cost would be of selling a home for $260,000? Is it 10%?
Are you asking me?
Yeah, I don't. I mean, I wouldn't know.
He's in real estate. It got to be less than 10.
Right. You hire an attorney.
6%?
Not an attorney. You hire a real estate agent, and they're going to charge 6%.
Okay.
In this market out here in Seattle, it's it's amazing what a real estate agent can make, in a short period of time, because homes are going.
Okay, but let's say with that figure, then you net out $150,000. You then put it 60% in the VTWAX and 40% in the bond fund. That $150 with a moderate growth of 6 or 7% that you can access whenever you need probably turns
makes
out
you
to
about
be
the same amount of money.
The same amount of money.
That's but with diversification
and liquidity.
That's
what I'm trying to get to here, Michael. So there's a trade-off, but I think it's reasonable to consider. I mean, the fact that you're in, just what Don said, I've been in the real estate. I've been a landlord. I didn't like it.
I hated it.
Don didn't like it. But you do this, so it's okay because we.
It's okay as a business, but nobody puts all their money in their business or in what they do. You need diversification. And I got to say, I agree with your wife. I think that this is an opportunity to add some diversification to your life, because there will come a day when, while real estate's great right now, it's wonderful, there'll come a day.
Okay, so, I appreciate your time, guys. The bottom line is, so you're looking at our ages, you're thinking more along the lines of liquidation
Yes.
in the event we need it.
Yep.
Yep.
I'd go to Vanguard. I'd probably do something like a 70-30, 60-40 at your age split, roughly. Go take the risk quiz at talkingrealmoney.com. It's free. Determine what your risk tolerance is. And then I'd go 60, 70% in the Vanguard Total World Stock Index and 40, 30% in the Vanguard Total Bond Market Index. 855-935-TALK is our number. Give us a call.
Tom and Don are talking real money.
Download the advisor interview form and find out if your advisor's a fiduciary at talkingrealmoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
855-935-TALK. If you call us during today's show, only during today's show, not during the podcast, we'll get you a ticket to the class on Wednesday, the Lunch Ed. Good help is hard to find. How you find a fiduciary advisor. I have this
Speaking of real estate.
Oh, my gosh.
Yes.
Real estate. We, as a nation, are real estate obsessed. We are obsessed. If you read Rich Dad, Poor Dad, or whatever the heck it is, Kawasaki Waki, he is obsessed with real estate.
Easy money, passive income.
It's always this passive income.
Yeah,
all of
do anything.
these people, the fire people, it's all about, we're just going to buy a bunch of real estate and we're going to have passive income for the rest of our lives and we'll never have to work again. Baloney. But there are people out there making a lot of money convincing you that you can make a lot of money in real estate.
And you can do it easily. You make an investment.
It's no work whatsoever.
It's either you flipping, which is easy, as you know. You simply buy something, you put a little time into, a little work, and you sell it for a lot more. Or you invest in this property, you rent it out, and you're rich because you have all these properties that are paying you a little bit every month.
And there are all these guys who are multimillionaires telling you how to do this. But are they multimillionaires from doing it or from telling you how to do it? Like this guy. I'm reading a little section of his book. We saw a fake Larry King. Apparently, Larry King is renting himself out.
I don't know if that was him or a hologram, but I wasn't sure. But
it could have been audio animatronics, but I don't know.
Okay.
This guy said, this is a quote from the book. I'll tell you more about it in a minute. Here's what one of my mentors taught me about people being stressed out. If you can cut a check for a problem, you don't have that problem. Repeat it like a mantra. If you can cut a check for the problem, then you don't have the problem. If your bills stress you out, cut a check. Problem goes away.
Oh, that's such a no-brainer.
Worried about your kid's college? Cut a check. The problem goes away. Worried about your parents? Cut a check. Let them retire like I did.
So he wrote a check to his parents to retire?
To help them retire.
Wow,
because he's
nice
so
son.
rich from real estate.
Oh, I see.
From his past. This guy was on this fake Larry King show selling you on a seminar that he's doing in the Seattle area this weekend, I think. I don't remember. And here's what he's going to do. Don't go to this. He works with Anthony
system.
Robbins.
I saw that, yeah.
And they're gonna tell you all of this stuff about how you're working too hard. Don't work so hard, Americans. Just get lazy, sit on your butt, and manage real estate because you're gonna be rich if you do like I do. But then what do they do with this thing? They sell you on a bunch of DVDs, a bunch of books, and then after you buy those, they tell you, well, for several $1,000s, you can join our Boots on the Ground. Quote, that's what he calls it. Boots on the Ground. We're going to take you out and show you how to do this.
Preferably not in the desert somewhere in the Middle East. But the bottom line remains, here's the struggle I have with it, is people see this, they go to the class, they get enthusiastic.
It's a raw class.
Oh, it always is. And then the devil's in the details. It is much more difficult than you believe. It's
a job.
That's what I'm trying to get to. If you do this and you don't do anything else, and you're a really good entrepreneur, I could see it working.
Of course it can.
Not knowing anything about his system.
Like any job.
Right, exactly.
Like anyone starting a business can work. Like we started Vestry. We work our butts off on it, and we're moderately successful.
10 years. Congratulations.
10 years almost.
This fall. Yeah, so
this fall.
The bottom line is, no, this is not a good way to make easy money.
But they get you. It's like this little analogy he writes up, or this metaphor. Imagine a farmer getting up every single day and taking the grain to his cows. Over time, over 15 or 20 years, he does this every day, and he goes the same way, and he builds ruts on his path to the cow. Eventually, he could just throw the grain in the back of the tractor, put it in gear, and let go of the wheel. because the tractor will take him where he needs to go.
Wait a minute now.
What?
That's a new one.
Do I have ruts that keep me doing the same thing every day? Well, get out of your rut and buy real estate. But he doesn't actually even say that. He's got another book that tells you to buy real estate. But is he making, if his system is so good and you can make so much money without any effort, then why is he working so hard, going on TV and spending a fortune to buy a spot with Larry King and then going to an arena to do a show and sell you books and sell you classes? Why isn't he just buying real estate and making a lot of money and not telling you about it?
There are other people in the financial industry who ask the same exact question. So
855-935-TALK. Give us a call.
Tom and Don are talking real money.
It may not be the sexiest website in the world, but it's your one-stop shop for real money information. TalkingRealMoney.com.
Reality radio for a really great future. We're talking real money.
Okay, apparently they do still have Grecian formula.
they do, but nobody else knows
Nobody
about
knows about it. Jeff Poziola knows it, has no clue what it is. Tom made a bad joke. There was a Grecian restaurant, and he goes, you get the formula there, and I'm going, huh? Yeah. Thought. Oh, the hair thing. Yeah, okay, got it.
Look old.
855-935-TALK is our number. Give us a call. Beverly, you're up next. Welcome to Talking Real Money.
Oh, hi.
Hello.
Hi.
Good morning.
What's up?
Good afternoon.
Yes, ma'am.
Yes, I have an 18-year-old who managed to save up $18,000.
Wow.
Nice.
Yeah.
You should be very proud, Mom.
Now, I don't know what to do with his money sitting in the bank right now.
It shouldn't be
Going to
sitting in the
college.
bank, maybe, but he's going to college. Does he need that money for college?
Definitely. He has some.
Maybe it should be.
He has some scholarship, but he has enough to go by, not touching his savings at this point.
But about when do you guess he would need to touch that?
I'm not sure. That's. This is the thing. I don't know how to converse with my kids about financial.
No, here's the thing. It's money because he might need it over the next 4 years. It's money that needs to remain relatively liquid. The reason I ask how long, and this is something you might want to sit down with him and determine, how far will his money that he has from the scholarships and the like carry him forward without needing to touch the money in savings. If, for example, it's a year, then put it in a 1-year certificate of deposit. Go to bankrate.com where you can find the highest rates in the country. Put it in a 1-year certificate of deposit where it might make about 2%, where the bank is paying 0.2%.
Can I make another suggestion here, too? You could do a little bit of both.
Sure.
I like the idea. So he obviously has some sort of earned income to come up with the $18,000.
Okay.
Is that true? He had a job of
He
some
must
kind?
have had a job, right?
No, it's from his late father.
Oh,
Okay, so he has no earned income. Because I was going to say,
I thought he was a good saver.
a Roth IRA or something.
Oh, yeah, that too.
Yeah, no, obviously a good saver.
No
So
Roth IRA
Roth
yet.
IRA won't work. Yep.
Well, and no Roth yet anyway for him. That money, he needs it
Well,
for
no, I was
college.
saying some for college and maybe a little
I
bit
would
in the
keep
Roth.
it all.
Okay.
Personally, I would keep it all available for college because you want to make sure that degree is so critical.
Yeah.
And I hate to see him go into high-priced debt for that degree when he has that money.
I guess if that's still undetermined, that's a
Yeah.
fair point. Okay.
Yeah, I'd keep it.
Okay.
I'd just find out if he has a year or more, and then I would put the money in a CD, most of it, keep some totally liquid in case there's an emergency, but put it in the highest yielding CD you can find and go to bankrate.com, and you can find those high yielding CDs. Okay, Beverly?
Okay, all right.
Thank
you very
you.
much.
Thanks
for
listening.
calling.
Yep.
Take care. 855-935-TALK's our number. Let's go. Let's get started with Cesar. Cesar, welcome to the show.
Hi.
What's up?
So you guys were talking about these real estate house flipping investor gurus. They're all the same. And I've actually been to quite a few events for various reasons, including Robin Thompson and some of the others. And they're all pretty much the same. They're selling people a product they can't use. And
That's
they
very
do
expensive.
high-pressure sales tactics.
It's a very expensive product they can't use.
Yeah, depending on which guru it is. And I actually personally spent $6,300, but I actually got into the business and it paid off for me. But you have to be willing to do it full time. And, usually when it sounds too good to be true, it probably is.
And you hit the nail right on the head. The problem is they make these things sound like you can sit on the couch and play video games and the money's just going to roll in and you can write checks and support your family and support your friends and support your parents and fly on jets, private jets. Nobody's doing that except them, and they're doing it on the money they made from the people falling for the system. Thank you so much for sharing your experience. We really appreciate it. 855-935-TALK is our phone number. We'd love to try and help you deal with your money better.
Tom and Don are talking real money.
Just about everything you need to know about money can be found at our website, TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
It's really important. Talking real money. I'm Don. That's Tom. We're here to help every Saturday from noon until 2 Pacific or 3 to 5 Eastern time. Plus, you can listen to us on our podcasts. I'm not doing the daily podcast because I've been on semi-vacation, but we have the weekly podcast that we have 2 times a week. You can listen to those at TalkingRealMoney.com or on your favorite podcast service. And you can also call us 24/7 at 855-935-TALK, 855-935-8255. But we still have a lot of time left in the hour, so give us a call now, and let's go talk to Sam. Hey, Sam, welcome to the show.
Hey, thank you very much. Yes, you're my hero. I've been listening to you since, way back when, in the 90s. But my question to you, I'm about a year away from RMD, and do you have a philosophy on how to take that?
Tom has a philosophy on everything. Whether they're right or not is another story.
So what do you mean by philosophy?
Like, do you take it all at the beginning of the year?
Oh.
Do you, dollar cost average it once a month, or how do you do it?
Generally, wait as long as you can, generally, because you give it market growth.
Right, you want more growth tax deferred.
And then take it all out at one time.
Yep. That would be my philosophy, too. I would do the exact same. I would leave it growing deferred until the very last moment.
We usually do ours in December for our clients.
Yep.
And then the money comes to them before the end of the year, and you take your RMD. So, as you know, there is the Secure Act that's working its way through Congress that is likely to push back RMDs to age 72. So there's another reason to wait even longer to see if that change would occur. It seems very likely, but I always tell my clients, I believe everything when it's signed and sealed and delivered. So in your case, that would be a reason to even wait longer to take it at the absolute last minute. But I would take it all in one shot. As you may know, if taxes are an issue and you would rather give it away, there's ways to do that and not pay tax on it too.
But the other reason you do it all at once is because it doesn't matter. You're going to take it out, and you're either going to spend it, which you're probably not going to do all at once, or you're going to put it into another similar kind of investment. So it's almost a lateral move. It's not like you're playing any tricks on the market. You're just going from one investment to the other and paying the taxes.
Good point.
Excellent. Thank you very much.
Thank you, very welcome.
By the way, the required minimum distribution begins at age 70 and a half.
Yeah.
The first year, you're taking out about 3.6% of the amount in the all of your retirement account.
It's a formula based on life expectancy.
It goes up in terms of percent for a while, and then it actually goes down a little bit. And I think if you live, you got to live to about 100 to take it all out if you just take out the required minimum distribution. So
it rises up to because
4s or something. But here's the thing to keep in mind. With the Secure Act changes, if you were to leave money to others in IRAs, they're going to shrink. So now you could get it taken out over the lifetime of the person who's inheriting it, sort of stretch it out. They call it stretch IRAs. Then, they're going to probably shrink it to either 7 or 5 years.
Right.
So it'll be
required to take it out
faster.
The only one who can get the stretch option under the laws they're writing is your spouse.
Correct. You can just put it. She can actually put it
in her own. Yeah.
Put it right in their own IRA and take it out for their life expectancy. That's correct. So, so it's tricky. But I would. I agree with you. I would just set up a time, make the sales, take the money out, and get on with your life. And you could, as you said, you don't have to spend it. You got to take it out and pay tax on it. You could reinvest it.
Right.
So
that's basically what most people do. I mean, if they needed it, they'd be taking it out.
There's you could do. I always forget the name of it, but there's a charitable way you can actually take the money out of the IRA and give it to a recognized charity, and then you don't pay tax on it.
Schwab does that, right?
Yeah, there's a couple. Anyway, so there's ways to do that. So, good question.
Excellent question.
Yeah, that's it. That's all I got.
Well, we're not done yet.
Oh, okay. I didn't know. You were looking at me rather quizzically.
We're not done. We got to stay for another couple of minutes at least.
All right.
Do you have anything else you want to talk about?
I really don't.
Really? Pretty much done for today?
I think that's it.
All right.
Yeah.
Just hang out.
You can give the number if you want.
I could give it, but you don't want to. Apparently, you're done. 855-935-TALK is our phone number. 855-935-8255. Give us a call and
if you want a topic,
ticket.
I'll give you a topic because it's in the news, and that is the fact that Nordstrom...
I thought you had one.
Well, Nordstrom is closing their
was the one.
Mall. Okay, good call. They're closing their Northgate store, which is sentimental, right, because it's been there for a long time.
I saw on Como TV News people weeping over their loss of their Northgate Nordstrom.
And Nordstrom was one of the best performing stocks in the, I believe they have this correct, the aughts, the 2000s.
Yeah, the aughts.
Yeah.
The O's.
Then it appeared that retailers are going to have a tougher time, right?
I wonder who caused that.
Well, I don't know.
Maybe that was another Seattle area firm.
In 2015, Nordstrom was trading for about $80 a share. Mm-hmm. Today,
what are they at?
$29.
Really?
Yeah.
That low?
That low. And as you may know, the founders are trying to buy back the company, et cetera, et cetera. There's a lot of things like this that the point is
there's a lesson in there.
There's
somewhere.
a lesson. I mean, individual stocks are risky. Businesses change. Business environments change. Right? It's very, very, very difficult to know the future of any one company or any one industry. Right? I mean, retailing looks completely different today, frankly, than it did as recently as 20 years ago. So, as we've told you many times on this program, the smarter approach is to own all those stocks, own index. That's why we give you at TalkingRealMoney.com the two free fund portfolio, the VTWAX, that's the Vanguard Total World Stock Index, and the Vanguard Total Bond. You simply have to balance between those two and get on with your life.
Wow, Nordstrom had a terrible week last week too.
Well, the market in general had a tough week.
Yeah, the market had a terrible week.
But no, they've had because the rumors are back again about the buyout and what it would cost.
This is the other thing that just it worries me about owning individual stocks is you never. It's not like somebody rings a bell at the top, as you mentioned. They don't say
ding,
this
ding.
is the day that it's going to go down and not come back up. Individual stocks do that, but the stock market basically cannot do that because the entire stock market represents the aggregate value of the every company on the planet. The global stock market is the value of every company on the planet. What would it take? Now, you can see how a single retailer could go out of business, but what would it take for the entire global economy to go out of business?
It was a comet, a nuclear attack.
A global nuclear attack, not just the Pakistanis and the Indians going at it.
Correct.
It would take all of us. And then people say, let's just in case there's global conflagration. What should I do with my money? Well, right now people are putting it into gold,
which has had a good
run.
Yeah,
gold's up to $1,500 an ounce.
Yeah,
which is again very volatile. But does gold just keep going up, or does it go up and down and up and down?
Recollection is it goes up and down and has had a hard time keeping up with inflation.
And overall, gold has never made anyone any money, ever. Not one penny over inflation, not one penny. And yet they buy it because of this fear that the world is going to come to an end. Well, let me just tell you, if the world as we know it, the economy of the planet, think The Walking Dead kind of destruction.
I try not to, but okay.
What good is gold? What are you going to want it for? What are you going to do with gold? You're not going to do a thing with it. You're going to want food, and you're going to want
you can't eat it.
That G word.
I'm gonna come and
thing.
take it too. By the way,
well, that's why, So you gotta quit worrying about. That's how you can stop worrying though about things going badly. Is own them all. 855-935-TALK is the number. 24 hours a day, 7 days a week. Call with your questions. I'm Don McDonald.
Tom and Don are talking real money.
Would you like to talk to a real investment advisor for free? Set up an appointment at TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Tell you what we're going to do about the class, because I think we're right at full. We're going to add a couple of extra chairs. If you'd like to attend, you can go buy tickets right now, but only for a little while. A couple of them is all we're going to be able to let go at TalkingRealMoney.com. These tickets include the class, which is a terrific class, if I do say so myself, and a really good lunch. You get to choose from a variety of choices, and it's a great way to spend your lunch break getting an education and getting fed. So go get your tickets at TalkingRealMoney.com. It's really easy. You just go to TalkingRealMoney.com, look for the events button. That's TalkingRealMoney.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy.